Good morning, everybody. All right, got a little gap up going here. Very questionable as far as new longs after a wide range bar. We typically get a narrow range bar after a wide range bar like this, which sets up a 1, 2, 3 continuation pattern. We'll see if that develops today. What we want to see. Charts. Why I always forget that very important thing. Share a signal. Here we go. All right. Charts are up. All right. So this is our factory work, as we call it, our just day-to-day routine. And so I was talking about the wide range bar that occurred on Friday, and you can see the nice little rally there. So I just moved up my middle, let's call it a middle green area, because this is where our major support is. And I really should pull that up here, because any move down to the bottom of that wide range bar is going to be a bad sign. However, that's where our major support is. You see all the pivots down here on the hourly chart. So I moved this middle one, what I eyeballed, and it's probably a little bit high just as eyeballing, but the 50% mark of the wide range bar. And it just gives us a starting point to where we don't want to see prices close below there. You often, volatility, whippy price action, you can get moves below there, but by the end of the day, we want to see buyers step up, strong demand, push prices back up above that level. And ideally, it stays in the upper third. So it's opening slightly higher. You can see the pre-market chart here. It's still, right at the 50 MA, which you couldn't get over, which is understandable after a move from way down here up to the 50 MA on a Friday. Understandable. It would have been a little more bullish if it could have gotten through it, but it didn't. You don't think it'll be a consolidation breakout? Well, Pete, I'm talking to Pete on the social media thing there. The whole idea or concept behind a 1, 2, 3 continuation pattern is a breakout, right? So a continuation pattern, when we talk about breakouts, we often look at that as being multiple bars. After we've had multiple bars down here in a wide range bar, it shouldn't result in another consolidation of multiple bars. If it does, something's probably wrong. So a 1, 2, 3 is a 1-day consolidation, multiple bars on an intraday chart, and then a breakout. So you're getting a breakout on the intraday chart, and it's a 1, 2, 3 continuation pattern on the daily chart. Now, it may not take off, on the third day, being day after tomorrow. Sometimes you get another day, 1, 2, 3, 4, which is even a better pattern. In any event, wide range bar, multiple bar move up on intraday. You can see the little minor pullback on the 15 toward that little shelf of support there, and it continued higher, in the afternoon. So it's a little extended from an intraday point of view, whereas on the daily point of view, it's just getting started. Now, what would be, I'm going to use the word unusual because of the way things came down, right? We talked about this a few weeks ago about the breakdown, the angle of retracement, the break below multiple pivot lows, turning the trend down. So now that it's taken out this pivot high, we could say the trend is neutral or sideways. It was pretty whippy, but it really hasn't closed. Well, it has closed above that pivot high slightly. So it's somewhat questionable. In any event, we've had a long period of consolidation, a breakout on the hourly chart. It came up close to the next area of price resistance. And now our expectation is a little resting period. Now, what would be unusual is 2 wide range bars after this nasty drop. If we were to get 2 wide range bars today, that would be very impressive. And we'd have to consider that as the start of a new bullish move. versus the way I'm viewing this right now is whatever type of consolidation there might be here, the upside target would be the 200 or slightly above. If you haven't looked on SPX, there's a tremendous open interest in puts and calls at the 4,000 strike. Very big compared to other strikes around it. And I spoke about this in a newsletter a few weeks ago as this was, setting up, was that, look, whatever's going down here, we had this big bearish, crash bets going on in sentiment, which made this suspect. I didn't know whether it was holiday squaring, end of year, whatever. But the fact that this was down here was, a contrarian view as to the continuation of this going lower. And it was just choppy day to day, bullish, bearish, confusing price action, a lot of uncertainty. So now, the stocks that have been going up are extended. That's why breadth is up here. However, there's a ton of stuff that had igniting bars on Friday. So now we need to see those ones that have showed relative strength. What type of corrective action do they have? They should hold up well. And so we've got this wide range bar out of a consolidation. Based on option activity, the breakout, our expectation is that prices should be able to go up. Maybe, so we've got this bullish view into the options expiration on January 20th. We don't know what kind of price action is going to occur on the right side here, right? If we all knew that, well, the story to that. But in any event, as long as it stays in this upper 50% on a closing basis, it definitely does not close down here again, because that would be negating Friday. It should work its way up toward that big open interest strike. And this is a void. So while it broke down like that, one of the things that we talk about or say to pricing price action is that, look, this is a power move. So you see this big nasty reversal on the weekly chart. It's a big range expansion bar and a breakdown. However, they create price voids, and it's the weakest link in the chart, meaning this suggested, this should break down. The option activity betting on that, right, and essentially a crash that is so extreme, said, well, maybe, but not right now. And now what should happen, right? Let's give both points of view to be fair, right? So what I said should happen is this should work its way up here. Well, as this kind of relieves itself, based on the price action here, the weekly chart, as this fails and we get a reversal bar that turns down here. Now, I don't know if that's going to happen. In reality, based on everything we're looking at, this strength, sentiment isn't at an extreme yet. The option activity, the price void, that shouldn't happen. But if it does, all bets are off on the long side. So, we've got our bias. We know what shouldn't happen. Same thing, placing any trade with a stop loss. We know that we don't have things firing on all cylinders, meaning this nasty breakdown, this is a counter trend move. Whereas if prices were potentially had continued down here to major support, and we had gotten this price action and this breakout, and internals were aligned, we'd be looking for a much bigger move than this potential move up to 400 or 4,000 on SPX, which you can see on SPX here is lined up right with the 200 MA, but no essential price resistance. So we'll see how far that gets. So that's the bias, bullish bias in the short term against this larger time frame. And hopefully, whatever news is coming out, there's a lot of news on Thursday. I don't know what the news was today, but clearly it didn't affect the market. There was news at early this morning. This was a yawn. But we don't want to see this turn into a questionable buy setup because of the move down failure that would result in a measured move lower. Okay. So just peek at the futures. And you can see it's peekabooing above this area here. And after a run like that, going long after any extended run is going to be higher risk or low odds as far as making a substantial move. So we want to see some corrective price action here after this move up. So the fact that this did run up, and it's a bit higher, increasing premiums pre-market in SPX. As I looked, let's check again. Right, 39.65, which is above this area right here, which I think is a reasonable bear call spread for today. Even though this has got a void, it's had a run up. Typically, you get corrective price action. Now, the day-to-day moves, averaging out these moves here, is about a little over 60 some odd points, close to 70 points. And mostly this is somewhat skewed by the big range day, which is 96 points. So averaging things out, even with all of these bars, give or take around 68 points or so, which would put us up around here. So even if there was a wide range bar today, which, depending on when you put that spread on, if you put it on early and it went up there, you're going to obviously be in pain, but you should be able, melting ice cube, time decay, it should be okay. Now, we should see some downside. So on the put side, I'd rather wait to see things actually see some selling before even considering a bull put spread, because the premiums will increase. In any event, you'd want to be as close to down here at 3,800 as possible. There's no premium there right now. So our halfway point, give or take, is like 3,850, maybe a little bit more. You definitely want to be down in this lower part here, closer to support on a pullback. Okay. And now we just look at other markets. This has been the underperformer. You've got a bit of a sloppy W pattern. There's this little consolidation here that's going to be dealt with. You see the momentum move down, the pop up, the retest, the wide range bar, and the little consolidation that's going on right now. Same messy chart, same move up. Right, raise our level up to where there's nothing up there. Scrolling that back, you can see there's just kind of not much of anything there, but short-term extended. So again, expecting some type of a consolidation day for now. And this was the strong sector. The Dow was the strongest and it led the way up. And so when I look at this chart, it falls in line with expectations as SPX possibly getting to 4,000 in the short term. And this, I'm looking at this and saying, well, you could look at it and say, what would you think? It meets the definition of a potential M top, meaning a momentum move up, a topping tail breakout failure, a retest of that bearish area. So in the coming weeks, I think this is a weekly chart, that it slows here. And if we were to get a bearish pattern up there into that options expiration, I'm going pretty far out in expectations here, but just keep that in mind. So whatever bullishness that we would see in the short term, in the next couple of weeks, potentially, our long-term view here, unless this can take out this high in some meaningful way, there's a ton of overhead resistance here going back, over the, the last end of the year there, ton of resistance. So, keeping things in perspective. And, the Russell, little relative strength there. I like that, moving up this morning. The 50 MA is there, so I think the upside is limited there as well. The dollar has been a little crazy price action here. Down here this morning, let's just see here, down to the bottom, but while this is down and positive, you would think the markets would be doing a bit better. This is in an area of major support. So we don't have everything lined up perfectly to say, hey, this is a good all-in scenario. This is one to be pick your spots, as we always do, but I don't think it's going to be the kind of scenario where things being lined up, you could throw a dart and you're going to make money. Gold moving up as the dollar moves down, of course. It's coming up to prior resistance. Silver led the way up. It's not at resistance yet, but it's stalled here. Taking a little rest and get finished here. Soft landing, no landing, recession, what have you, a lot of different opinions. And, they're going to raise interest rates. The 13-week is pushing up here. Maybe it'll be for the last time. Who knows? Right? We don't. But as long as this continues to march its way up, the expectation is the Fed's going to raise interest rates. And, one of the things that's interesting, there's always something interesting, is that while we got this inflation theme, which is playing out because of these inverted yield curves, which you can see here, very inverted. If I can find the right, look at this, industrial metals breaking out. So, how do industrial metals, which are good economic measures of, the economy, you've got one thing saying, hey, things are slowing down while silver and copper are moving up. It's kind of all out bearish recession view, kind of neutralizes that somewhat. All right, so I think that's it for me. I mean, even last I would say to look at, well, we always look at the interest rates, which are coming down. So things slowing. Fed, what they're doing is taking effect, but oil came down nicely over the last week. And the transports had a great day, like everything else. So after a nasty crack. So we'll see how this plays out. We don't have a no-brainer kind of situation here. So as always, stop losses, money management is the key to whatever you're doing here. Yes, Tony. So the dollar has been closely correlated inversely with SPY, or the stock market, over the last year. And that seems to be disconnecting a little bit. So, all yours, Dan.
Good morning. Yeah, so we have a full bullish bias here, provided we don't retrace 40%. That's why I did that video over the weekend. It's short put spread heaven. I think I had 15 new trade ideas in the weekly options trader, but for there not being a weekly expiration of many things and the liquidity on options, I could have come up with 300. I mean, so Greg used the term throwing darts. It is kind of throwing darts on put spreads, provided you go through our checklist as always. So here, we set an alarm go off on snow. We have an open position. So we have one problem child. I'll get right to it. Lulu is a problem child. This is one of our open put spreads. Had a nice little gap up. It's a beautiful pattern for a put spread. It broke out in 180 reversal and price void, and they came out and then given a profit warning on margin, and it's getting whacked. So we'll just deal with it. I told Greg if we were long stock, the pain would be a whole lot worse than a put spread, because regardless of what spread width you did, you're not gonna be at max profit just because we got 5 full days of time decay left. So yeah, it's a problem. I'm in it myself, and I'll keep an eye on it. Let's see what other gappers we have here. DCT closing breakout from a big trading range. breakout bottom. This Wednesday, we're talking about bottoming patterns on in MT Live. This weekly is a fantastic one. Why? Wide range breakdown, no follow through, big old bottoming tail, range expansion, closing breakout. That's a quality bottoming pattern. But you know, the gap up's messing it up. Had it not been gapping, I would have said, yeah, you can buy Friday's high, stop Friday's low. So I'm not going to mess with that. I got plenty of stocks that might already have tons of alarms going off pre-market here. That's going to be a busy morning. Arrow, I don't know what's up with this, but it's getting whacked too. We'll come back to it, and you know, it still has support here. We'll see if buyers step up. Dawn, another gap breakout. Gap's too big though, no interest. Kerbal, I just posted another bottoming pattern. So this is another quality bottoming pattern. That's a quality put spread. We're, you know, selling the put spread, the 95s, just because they don't have even dollar ones. Otherwise, I would have done the 94s. But it's gapping up. Looks great. There's just put spreads galore. Buy here, gap's too big. Echo Hotel, another beautiful bottoming pattern. You know, notice the moving averages were all down here. So this was a breakout here. But this one is the granddaddy beautiful breakout here. Because it consolidated, allowed the 2050 to flatten and curl, and range expansion, closing breakout. And a deeper tracement, rebuilding, another closing breakout right there at the 2200, and it's been on a tear. It's gapping up now though. If I were in trail mode, I would be thinking of selling the gap up today myself. Mister here is one of these Bitcoin kind of stocks. It's a sloppy bottoming pattern, still in a downtrend, but there's signs of a short-term bottom. And now it's gapping up. So that could be a put spread idea. And to it, we're in Olex, we're in Goldman Sachs. We have as a put spread idea and long, kind of a little bit of a retest here, a little bit of a W, but over Wednesday's high, last week's high, put spread and directional looks good. Buy setup on the weekly. And I also read in the journal that they're joining the party of layoffs. I think the paper said they're laying off 3,400. CH, and then there's another article that says CHX alarm just went off. This is a breakout. Now this I don't call a bottoming pattern myself. This is what I call a consolidation, you know, in an uptrend. Got rising 5,200. Bottoming patterns are more beat up things, and the selling is easing, and then you get bullish price action to suggest that it's ready to move up. But yeah, I was reading something in the journal. They were saying that Powell's not going to quit until he sees rich people feeling pain too. Because right now, rich people, you know, it's an inconvenience, inflation and all this, but not changing their life. All right, BABA here. We were talking about BABA and the whole Chinese sector on Wednesday. Had a beautiful gap breakout. I think, what's his name? Charles, whatever his name is exiting or something or other. But no setup for me. CMI, why am I looking at you? Maybe it had some earnings guidance, but I don't like the way it trades. This one also had some earnings. Now, if this one can get over last week's high, you got to go through your checklist, but the pattern over last week's high is another no-brainer foot spread. Yeah, Jack Molly. Q Dell, another foot spread. And these are just everywhere. Dash had a downgrade, but no pattern. EXIS, beautiful gap. And look at the buy setup on the weekly. There's another bottoming pattern on the weekly. That's a big inverse head and shoulders. So that's now the gap's so big that it might take a week to set up to interest me, but looks good. Greg mentioned TAM and the weekend ladder, little breakdown failure here. So I looked at a couple of solar stocks. This is a put spread candidate, but it just didn't have enough juice. So I looked at this one. Do you remember we were looking at this 1, 2, 3 back here in December? Wow, that just got devastated. But I'm going to set an alarm at 240. And that could be a put spread idea. This one typically is very juicy. Hey, Don. Well, there's nothing to review. I did talk about it already. There's nothing to review now because I need to know. No, because we're in a put spread, Alex. So I started my comments today with this stock. It's gapping under. It was a beautiful setup. It's gapping under, and there's nothing to talk about. I need to watch price action. All right, LOW. No, LOW alarm here. So over last week's high, this was a put spread idea also. EXAF, yeah, that's on my list. Oh. Crap on that. All right. Move, another no-brainer put spread candidate, but the spreads are ludicrous. It's an ETF. But you know, these are just shooting ducks on a pond of beautiful setups. Intuit alarm. Yeah, I'm going to be going nuts here at the open with alarms going on, which is good. I mean, we are 100% bullish stock and option positions. Don't have a single short on. So this gap up's helping us. Might make it a little difficult getting on board some things. All right, XLV. XLV is more of a catch-up trade over last week's high. ALB alarm just went off. CTVA. And WSM. This sense it's going nuts here. RJF. All right, so let me concentrate now on SIG alarm opens and new trades that were in the letter.